You got to decide which one you're betting on to figure out where you believe the market's going, right?
No, you're right. And look, we're definitely slowing here in the States. We're definitely slow around the world. I thought the data over this weekend was really pretty negative. Gazprom, the news, they're shutting off gas supplies to Europe indefinitely. China cuts their RRR, their lending rate, by 200 basis points because they're so slow. And they're now seeing more closures because of COVID. And the Fed got the green light on Friday from the non-farm payroll numbers because wages are still high at 5.2% year over year.
Today,
and oh, by the way,
right? Today, too, right? ISM was more green light.
Yes.
Therein lies the problem.
And therein lies the problem. And home prices up 18% year over year last week. And so that means rents, which follow home prices by about a year, will remain high. And that's a third of CPI. And we've been talking about that. So inflation is hot. Fed continues to go. We're slowing. It's kind of a recipe for just staying choppy, right? And I understand that the earnings are vulnerable for sure. I believe that. But I still think that we're going to see growth this year. Next year, obviously, it slows down a bit, but it's really a delicate balancing act right now. I think you have to have a little more cash and a lot more patience. Yeah,
you got Josh, the Fed chair this Thursday. As they said last hour, he's speaking there. He's going to be hawkish. There's no reason he's not going to be. Is it as simple as I laid it out at the very top? It's a simplistic way of looking at it, but it feels like that's it. You either are optimistic because you think there's going to be a soft landing, or you're pessimistic because you think that while the economy is relatively decent now, they're going to overdo it and push you into a recession. Earnings are going to go way down and stocks are going to follow.
Well, here's the thing. Historically, we know that unless you're like a very short-term trader and you're being graded on like quarterly performance, then historically, if you've wanted to get bullish, you've been better off buying after the market bottoms than buying before. That's just what the data suggests, meaning the end of a bear market doesn't go out with a whimper. It truly tends to be an event. And a lot of the loss of a bear market occurs within that period in which it ends. So it's very tough because it's clear that we're still in a bear market. And I think a lot of people don't have the context of what it feels like to actually live through a bear market, because for the last 12 years, we've had nothing but V-shaped recoveries. Even during a pandemic that killed 1 million Americans, the stock market's reaction was a V. This is the first time in a long time that it's not working out that way.
Why? You know why? You know why. I know you know why.
Tell me why.
Because the Fed was your friend every time. The Fed's not your friend anymore.
Look at you.
The friend is your foe.
Listen,
right? But seriously,
I couldn't agree more. Listen, so here's what I want to do very quickly. My colleague Ben Carlson, who writes at A Wealth of Common Sense, we get inundated with questions from clients. How do we know it's a bear market rally? How do we know that's not the bottom, et cetera? So for context, the 2000 to 2002 bear market is, in memory, the most similar to this one. And we had 5 major bounces during the course of that bear market, each one leading to new lows, which is how you know it's a bear market rally. You had one that was 19%, one that was 21%, the next one was 8%, then 21%, then 21%. 3 times you had a 21% bounce off the low during that 2-year stretch, and every time was a heartbreaker. For context, the bounce we just saw from June 16th into pretty much the middle of August was 17.5% trough to peak. So completely within the range of what we've seen historically for a bear market rally. But unfortunately, that latest one just ended in tears as well. So I think we're still in that. I don't want us to be. I'm not rooting for negative news. I'm not rooting for any of the things that are driving this market lower. But I'm just trying to consistently explain to people we are not out of the woods yet, and your behavior should be moderated.
You get QT.